Good morning, all, and happy Friday. Welcome to this edition of Balance in Life, where we are happy to welcome back our financial expert, Dr. Travis Mountain. We've been checking in every so often with Dr. Mountain just to get an update on what things are happening and what we need to know in the world of our personal and family finances. There's some things that we know that are happening that will be some things have started, some things are coming to an end, and then there's always some general practices that we could be incorporating into our own lives to help with our own financial well-being. So I am happy to welcome Dr. Mountain and happy to welcome you all on behalf of Virginia Cooperative Extension, our Human Development Program team, and our partners in this webinar space, North Carolina Cooperative Extension. I am Crystal Tyler Mackey, your host for the day, and I will be moderating the chat box. If you would like to engage in the chat, we welcome you to do so. If you'd like to share out with all the other wonderful participants, then choose that drop-down menu in the chat box that says all panelists and attendees, and then everyone can see your comments. If it just says all panelists, only myself and Dr. Mountain will be able to see your good thoughts. So having said that, I welcome you, and I am glad to turn the floor over to Dr. Mountain. Welcome back, Dr. Mountain.
Hey, Crystal, thanks so much for having me. It's great to be back. And as if on cue, right at 10 o'clock, they started mowing the lawn right outside of my building. So hopefully that does not become too distracting. Like Crystal mentioned, I'm going to talk a little bit about some personal finance, some things that are changing, some things that will be starting up again. And then we're going to end with some tidbits on some personal finance. Here are some things that we're going to cover, and this is the order that we will cover them. We've been getting quite a few questions about the child care credit, so that looks quite a bit different this year than it has in the past. A little bit about the stimulus payments, talk about evictions, student loan repayments, credit reports, and then some last odds and ends. All right, so here is a picture of my son. He's doing some grading for me, I think, for the class that I teach. But really why I have a picture of Patrick here is to talk a little bit about the child care credit. So I did not prepare a question in Zoom, but I'd like to see in chat what some of the answers are. So here is the question that I have that I want you to think about. What is the most amount of money a person can receive per child in the child care credit for tax year 2021? So again, what is the most amount of money a person can receive per child in a child care credit for tax year 2021? All right, so I do appreciate all the comments. So I do see one financial answer so far. So I see 3,600, I see 2,000, 1,100. All right, so a lot of 3,600s. Great. Karen, I think maybe you've answered several times, so make sure, Karen, only one answer will count for credit in this class. But here we go. Let's look at what some of these answers are. So we'll come to that in a second. So the Tax Cut and Jobs Act, so that was major tax legislation that changed in 2017. So December 2017 is when it was passed, but it increased the child tax credit from 1,000 to 2,000. So some people gave the answer of 2,000, and that would have been the correct answer for last year. $2,000 was the most amount of money that somebody could get in 2020. So I just showed a picture of my son. He's 19 months old. So last year, when we did our taxes for 2020, which we actually did April 2021, we got a child tax credit in the amount of $2,000. That was the maximum amount last year. And that was for any children that were 16 or younger at the end of the year. So if you had a child that was underage, that was 16 or under, by the end of 2020, you received the child tax credit of $2,000. There's no limit to the number of children that could receive this. We have one child, so we only got 2,000. If we had 3 children, we would have received 6,000, et cetera, right? If we had 5 children, we would have received $10,000. There are some income limitations, though, that we do want to be aware of. So if I was making $1 million, I would not have received that much money. But so far, Virginia Tech is not willing to pay me $1 million. But truth be told, I haven't asked for that either. So there's that. In 2021, there are some changes, right? So now it's 17 years or younger, okay? So they increase the age by 1 year. So this year, if you have a 17-year-old, by the end of age 2021, that 17-year-old is going to be eligible for this child care credit. If that 17-year-old would have been 17 at the end of 2020, they wouldn't have been eligible. So this helps families by adding an extra year. More children are going to be eligible. Also, if we have children that are 6 and older, instead of receiving the $2,000 credit that they would have received in 2020, they will now receive $3,000. Okay, so this year, if we have a 8-year-old, let's say, we are going to get a child tax credit of $3,000. In 2020, when that child was 5, we received $2,000, right? So this is an increase in $1,000 per child that we have between the age of 6 and 17. Okay. Now, a lot of people gave answers of $3,600 to my trivia question, and that is the correct answer. The maximum amount that we could receive is $3,600 if our child is under the age of 6. So if they're 5 years or younger, we will receive up to $3,600 in a child care credit. Okay. Now, another difference this year compared to years past is that half of this credit may be paid in advance starting in July. So for instance, last week, Friday, my family received a $300 payment that was paid directly into our checking account. And that was for this child care credit. Okay, I'm going to talk a little bit more about that in a second, right? So last week we received $300. In August 15th, we're going to receive another $300. September 15th, we're going to receive another $300. Okay. Again, there is no limit to the number of children. Any number of children that you have will qualify for this. But again, there are some income limitations. All right. All right, I'm just kind of checking on the chat. And yeah, it seems like the most recent comments, they were all correct. Depends on the child's age. That's correct. $3,600 if they're under 6. That's correct. Yep. So a lot of correct answers here. Perfect. All right. What about some income limits? So this gets a little bit confusing, and a lot of people have some uncertainty about this. So there are 2 different income limits that are relevant. There's income limits for the regular benefit that I have here, which is that $2,000. This is nothing new. That $2,000 we had in 2020. We also had in 2019. That's part of up to the $3,600 we have for 2021. There's the regular benefit of $2,000. The phase out for this is pretty high. So if I am single and I have income that's less than $200,000, I'm going to receive this $2,000 child credit. The $2,000, out of the $3,600, I'm going to receive that $2,000. If I'm married and I file taxes with my spouse, as long as we make under $400,000, we are going to receive at least $2,000 in this child tax credit. Okay. The enhanced benefit, so that is the benefit that's above $2,000. So again, if I have a child that's 5 or under, I could get an additional $1,600. That would put me at $3,600 total. If my child is 6, between 6 and 17, I would get an additional $1,000, right? The phase out for this is lower. Okay, so the phase out for this is lower. The idea here of enhancing these benefits is to help families that were negatively affected by the pandemic, right? So the government is saying, okay, it's important that we give these families with children extra money, but we want to make sure that it's families that need the money, or at least try to make it so it's families that are more likely to need the money, right? So the thresholds are a little bit lower there. So if I am single, the threshold starts at $75,000. Okay. If I'm married and I file my taxes jointly, the threshold is $150,000. So again, really the takeaway here is that people who are making $200,000 and they're single, they can get the regular benefit, but they're going to get a reduced enhanced benefit. Okay. Here's a little bit more on this child care credit. So again, we're going to expect payments on the 15th of the month. How will you receive this? So I mentioned that I received my $300, or I should say my family received our $300 directly to our savings account or our checking account. Now, there is a portal that the IRS has, and I have the link here, and I can share that with Crystal to make sure that we get access to it. But we have a portal here, and what I can do is I can manage my advance payments. And Crystal, can you see, am I sharing the screen or not right now?
Yes, you are.
Okay, so this is what the IRS website looks like. If I go to manage advance payments, it's going to ask me to either use an account that I already have, or it's going to ask me to create an account. Okay, so I'm just going to move this browser off for a second. I'm going to sign in with my existing account. Okay, so just give me a second. This makes for bad TV. I realize it. And anytime you log into your IRS account, you're clearly going to have to put your username. You're going to have to put your password in. And then I'm not sure how well you can see it, but it also is going to send you a text message with a 6-digit security code. Okay, so I just got that texted to me. So now I am entering it. All right, so again, that makes for bad TV, but here we go. Just hold on for one more second. Okay, so I am now looking at my account. So it's saying, okay, the last time that I logged in was July 23rd, and I logged in a few other times, the 21st, 13th, a few times. So if I go to my account, right, it says, welcome Travis Mountain. So that's me. It says eligibility. Are you eligible to receive this benefit? And this is going to be based on the information that the IRS has from the preceding year. So the preceding year being 2020. So they know when I did my taxes last year that I claimed my son on my taxes, right? And they have his social security number. They know when he was born. They know that he is 17 or younger. And they know specifically that he is 5 or under. So that's how they determine how much money that they were going to give me. If I go under process payments, it shows July 15th, they sent money directly to my checking account in the amount of $300. Okay. Now, also what I can do here is I can unenroll from payments. Okay. So I could unenroll from payments. If I click this unenroll from payments, I am going to stop receiving the $300. Right now in the chat, can anyone think of a reason why somebody may want to unenroll from receiving these payments? And while I'm waiting on some chat responses, again, remember, if I would have had 2 children that were 5 or under, this dollar amount instead of $300 would have been $600. Okay, so I can unenroll from these payments. Does anyone have an answer? Crystal, were you guys seeing my PowerPoint or were you seeing the web browser?
We only saw your PowerPoint while you were logging in, and then you went back to the web browser.
Okay, yeah.
Yes.
Yeah, so I was just trying to protect some type of
Yes.
information.
We get it.
Okay, so do we have any answers of why somebody might want to end or to unenroll from my payments? All right, so you don't have to pay. It will affect the refund, so you don't have to pay. Prefers a payment at the end. Yeah. All right, so I think those are all along the right track. So what happens here is if I unenroll from my payments, it's not as if I lose the money. Okay, really what this $300 is a prepayment of the money that I otherwise would have received when I do my taxes next spring. Right? Taxes are going to be due in April 2022. So if I unenroll from my payments now, I'm just going to get more money back when I file my taxes. Let's say I do it April 15th, 2022. Okay. Because I'm receiving this $300 now every month, that just means when I file my taxes April 2022, instead of receiving $3,600, right, I'm going to receive like $1,900, half of that. Okay. So again, the family just needs to think about, am I better off having the money now, or would I like to have a larger payment in April? And again, a lot of this is specific to each household. From a purely economic standpoint, we would recommend that somebody is receiving the $300 every month, because then they can put that money to use. Maybe they have expenses they have to pay for. Maybe they're going to invest it. They're going to earn interest on it, whatever they're going to do. From a more psychological standpoint, a lot of families getting a larger refund in April is forced savings, right? They rely on getting that $3,000, $5,000, whatever the refund is. So for those families, they may be tempted, if they were to receive this $300 every month, they may be tempted to spend it on something that isn't in their best interest, right? Or maybe something that they're going to have some type of regrets over in the future. So again, it's up to each individual family or household to decide, does it make more sense for me to receive the money now, or do I want to receive a larger payment in the spring? Again, it doesn't affect the amount of money you're going to receive. It just affects when you receive it. Okay. So on that portal right now, I don't have a lot of things that I can change. I can opt out of receiving those payments, which is what I just showed you. I can also change it if it didn't have my bank account information. Maybe they only had my address, so they're going to send me a check through the US Postal Service. If I would prefer to get that sent directly to my checking account, I could set that up. But later on in later on this summer, they're going to allow you to make changes, right? So a question that I sometimes get is, what happens if I had a child in 2021, right? What happens if you gave birth or your family had a child in July, this month right now? Well, you are going to be eligible to receive that money. If you do absolutely nothing, you will just receive that $3,600 when you do your taxes in April, okay? If on the other hand, you just had that child in July, and you're interested in getting that $300 every month, eventually this summer, the IRS is going to allow you to enter in that dependence information so you can start getting that money, okay? The last thing I want to say about this up to $3,600, as of right now, that is only in place for 2021, okay? So only in place for 2021. So if you have a child that's born on December 31st, 2021, you are going to receive $3,600 due to this child care credit. If on the other hand, you have that child on January 1st, 2022, you are going to receive $2,000, right? Right now it's set to go back to $2,000. So a $1,600 difference there in the one day, right? Are there any questions, Crystal, that you're seeing right now?
Not so far. I think we're good. I think you've answered.
So I'm seeing comments. Yeah, so I'm receiving the money now, right? So Karen's correct. I'm receiving the money now because I feel like there are things that I could do with it that are going to increase my family's financial well-being, right? So that's why I'm receiving the money now. Okay.
Travis, there was a question earlier about whether you were using child care credit and child tax credit interchangeably. Are those the same thing or are they different things?
Okay, yeah, so that's a great point. If I said child care credit, that is not what we're talking about here. So child care credit, excuse me, so that would be a credit that I'm using. The most common example would be like daycare, those types of things. So if I said child care credit, this is not what we're talking about. This is just simply a credit for having the child. So it doesn't matter if the child is going to camp, going to daycare, grandma's coming over and I'm paying grandma to watch the child while I'm at work. This is not the child care credit. So if I misspoke, and I have it right there in the slide. So that's not what this is about. This is just for having my child. So yeah, apologies for that error. Good question. All right, my next question that I have here is related to stimulus payments, or really economic impact payments. And if you've attended any of my previous sessions, we really try to make this point clear. So here's the question. I need to pay taxes on any stimulus payments that I receive. So just simply a yes or no. All right, so Karen Munden, Karen Poff, extension agents that specialize in financial education, Kim Edmonds, all right, great. So 100% expect them to get the right answers, which they did, and I'm seeing a lot of other no's. That's great. There still is a lot of people that are having questions about that. If you receive any type of economic impact payment, or a lot of times we just refer to them as stimulus payments, you do not pay any taxes on that money. Okay, so here, this slide I realize isn't awesome, but it shows the 3 different rounds of stimulus payments that many households in the United States received. The first one, most people received around April 2020. The second one was earlier this year, January 2021. And then the most recent and final version was March 2021. Now, really what I want to focus on here is, well, first, all of them, none of them were taxable. But another major difference here for round 3 is that for the amount of money that you were able to receive per qualifying dependent, there was no age restriction on that. The first 2, round 1 and round 2, your child had to be under age 17. So a lot of families, they were surprised when they had a son or daughter who is, let's say, 18 years old, and they were a freshman at, NC State or Virginia Tech. They were expecting that they were going to get stimulus payments for that child, but they didn't, because that child was over the age of 17. For this third round, that age limit wasn't in place, so they would have received stimulus payments. Also, if you have a qualifying dependent who maybe is like a parent that you're taking care of, right? If they qualify as a dependent on your taxes, you would have received stimulus payments for that dependent. So I know a lot of people were kind of upset or surprised for the first 2 rounds that they had an elderly parent that was considered a dependent on their taxes. They did not receive any type of stimulus funds for the first 2, but they did receive them for the third one. Okay. The third round, again, that most people received in March, that is considered a 2021 tax credit, while the first 2 were for 2020 tax credit. Okay. So here's just an example. Hopefully here's an example. Okay, so for my family of 3, April 2020, we received $2,900. January 2021, we received $1,800. And then March 2021, we received $4,200. So we received a total of $8,900. And none of that money is taxable. Again, the purpose of this is to help families that were negatively affected by COVID-19, as well as to try to help stimulate the economy. So the government was hoping that this would help me pay back anything that was in arrears because negatively because of COVID-19, we weren't able to pay, and also that I would start spending money to try to boost the marketplace. Okay. Now, since for the child credit, I mentioned if we have a child that's born anytime in 2021, so let's again just use the example of December 31st, a child born in December 31st, they are going to be eligible for this $1,400 qualifying dependent. Okay, so if we have a child born December 31st, 2021, we are going to receive this $1,400 when we file our taxes in April 2022. If that exact same child, instead of being born December 31st, is born January 1st, we will not receive this $1,400 qualifying dependent. Okay, so really, if you're keeping score at home, that's $1,400 for this, $1,600 for the child care credit, or for the child credit. I keep on saying care for the child credit. That's a difference of $3,000 if the child is born December 31st versus January 1st. Okay. Yeah, so that's a good question, Vanessa. So also adopted. So if we adopt a child, as long as they meet the thresholds of age, that would also count. They would be a qualifying dependent. We would receive that $1,400. Great question. Okay, so I only have like 5 minutes, so I spent a lot more time on the child credit than I was anticipating. Some things that I want us to be aware of, because I really do want to get to the last slide. There are some moratoriums that are ending soon. So July 31st, so that's next week, Saturday. So I know it's Saturday because that's my birthday. Happy birthday to me, that's exciting. But next week, Saturday, is when the eviction moratorium ends. Now, in Virginia, we have this Virginia Rent Relief Program. In North Carolina, they have something that's referred to as HOPE, so Housing Opportunity Prevention of Eviction. If somebody is behind on their rent, these resources are out there for them. Now, nationally, we have not done a very good job. And when I say we, the states have not done a really good job of making sure that this money is getting into the hands of people that need it. That said, Virginia is one of the states that has been doing a really good job, as well as Texas. So a lot of times those are the two states that are somewhat ahead of the curve. But I do have some numbers here that just kind of show how behind a lot of these states are. So there's still a lot of people that are in the pipeline who have gone through these different programs hoping to get rent relief, but they just haven't received it yet. It's estimated that the average person that's behind on their rent due to COVID-19 is behind by somewhere between $5,000 and $5,500. So a significant dollar amount. So for a lot of these people, come August, it's going to be a big struggle for them. Now that said, okay, that said, somewhere on here I have it. So I guess the last bullet point I wanted to mention. So there are about 5.6 million renters that are behind. Okay, and that was as of June. So this isn't just a small amount of people, and about $24 billion they are behind. Next question I have, student loan, and if we have time, we can talk more about that. But for student loans, I want us to be aware if I have federal student loans, interest is not accumulating right now, right? I was able to put these loans in forbearance. Right now, that's set through September 30th, 2021. So no interest is accumulating. You know, that's great for these households and families that qualify for that. One thing from the personal finance standpoint that we are concerned about is these households for roughly 16, 17, 18 months have not been making that student loan payment. And now come October, they're going to have to start making that student loan payment. And for a lot of people, they are no longer, or they kind of forgot that they need to budget, right? Maybe they have a $200 student loan payment. That $200 they've been paying on other things, right? And maybe those were completely rational choices. But now come October, they're going to have to start resuming, or I should say resuming that $200 student loan payment. So it could be a big shock to the system for a lot of these households. Credit reports, the main thing that I want to get out there that has changed since the last time I gave this presentation. If I go to annualcreditreport.com, I can get my credit report once per week from each of the 3 credit reporting agencies now through April 20th, 2022. So last time I gave this presentation, it was through April 2021. It is now through April 2022. Usually, I'm only able to get my credit report once from each credit reporting agency per year. So after this presentation, if you go to annualcreditreport.com and you pull your credit report from Equifax, TransUnion, and Experian, you can do so a week from now. And then you could do it again 2 weeks from now. Really, the purpose of that is we're trying to look for errors, right? We're trying to make sure that something doesn't show up on that credit report that shouldn't show up. So if you are in forbearance on your mortgage, for instance, or if you're in forbearance on your student loans, you should see that on your credit report, but it should say something akin to it's in forbearance and being paid as agreed. The being paid as agreed is really important here. If it has been reported incorrectly and you haven't been making, let's say, mortgage payments for the last 4 months because you're in a forbearance program, and it says that you are late on those payments, that is an error, and that's something that you want to get corrected. So you're going to want to contact that credit reporting agency. You're going to want to contact your financial institution and try to figure out why is this being reported as being late when you are in a forbearance, because it shouldn't be entered in a forbearance. Okay. All right, so I just kind of gave away the answer there. I'm not sure if anyone saw it, but we don't really have time to ask the question. I'm teaching a personal finance course right now for undergraduate students, and they were shocked at this second bullet point. So a question that I would have asked you if I had more time, since March 2020, so March 23rd, 2020 was the low of the stock market during the pandemic. As of right now, the stock market is up 106%, right? So if I would have kept my money in, I wouldn't have taken my money out. I kept it in from March 23rd to now, it would be up 106%, right? A lot of people, if we're talking about finances, they don't really stay invested in the long run. They saw that the stock market was going down in February, going down in March, and a lot of households took their money out. They missed out on huge growth. Some other tidbits, so mortgage rates are still historically low. Mortgage rates right now around 3%. So if anyone's looking to buy a house, rates are really low. If anyone's looking to refinance, maybe they took out a mortgage 5-6 years ago, 5%. Now you can get rates considerably lower, right around 3%. Both North Carolina and Virginia have extended unemployment benefits through the beginning of September. So just be aware of that. Crystal, I think I'm out of time. Was there any question you wanted me to answer?
Yeah, one quick one that just popped up was, does checking your credit report lower your credit score?
Yep, so that's a great question. So if you go to annualcreditreport.com and you pull your credit report, that will not negatively or positively affect your credit score. When you pull your credit, let's say you do that tonight, and then 2 months from now you pull it again, it's going to show up that you looked at your credit report, but it's going to count as like a soft pull or a soft inquiry. So it's going to show up, but it doesn't affect your score. If on the other hand, tonight you go home and you apply for a credit card, that too will show up when you check your credit report in this example 2 months from now, but that is going to affect your score. That would be considered a hard pull. So if you're pulling your credit because you're trying to take out a loan or a credit card, that will affect your score. Usually when I do that, it negatively affects my score by somewhere between like 3 and 5 points.
Thank you. That was the main question. One person had a question that was a little more detailed about unemployment taxes, and maybe we can address that in the email when we send that back out. But there's a lot to keep up with. There's a lot to keep up with. So we appreciate you coming back and giving us these updates and for sharing out the resources. So you'll share your slide deck with us, right?
Sure, yeah, no problem.
And then we'll have access to all of those links and things that Dr. Mountain shared with us. So I just want to say thank you for bringing us up to speed. And I for one, just want to lift up an appreciation for you sharing how and why some of the things that are happening, what they're for. So why have these opportunities come for us, right? So when we got the stimulus payments, and you mentioned if we were behind on some things, that part of that could give us the opportunity to catch up on some things we may have been behind on, as well as stimulate the marketplace. I think many of us thought it was just about stimulating the marketplace, but the thought of being able to catch up on some things is really a personal gain for us, where stimulating the marketplace is a collective gain. So appreciate you sharing out what those are for and sort of where they came from, and always welcome to think about how we move forward with our financial well-being. So having said that, there were a lot of these in the chat, so I'll say it out loud on behalf of all of us. Happy birthday. We hope that you have a great birthday.
Thanks. Yeah, and I see that my mom attended this one, so I'm glad I noticed that at the end as opposed to the beginning. No pressure.
Exactly, no pressure. Hi, Mom. Well, thank you all for being here. Appreciate everyone. When the recording and the slides are ready, we'll send those out with an invitation to come back. Hopefully you'll join us again next week, same time, same place, different topic. Thank you all for being here, and I hope you all have a fantastic weekend. Thanks all. Bye.